Good afternoon, this is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with your market report ending the week of December 15, 2016. As we wind down the crop year, the calendar year, let's see where the markets were over the past week. As a general rule, the grain markets were quiet. For the week, corn down about 3 cents, beans unchanged, wheat down 4. The activity excitement this week was in the livestock trade, with hogs up $3.50 to $4 and cattle also up $4. Some of that seems to be market related to weather, also better cash trade in both factors. Very active trade that way, and we'll touch on that in a little bit. As far as the crops are concerned, or the grains, we continue to see a very choppy trade, range bound. The corn market seems to have trouble reaching much over the top side of the recent range, 360 high. Interestingly enough, if you look at March corn going back to mid to late summer and that July-August time frame through the current market, eyeballing the market, corn stayed between 340 and 360 probably 80-85% of the time during that time frame. So even with today's quiet trade or this week's quiet trade, we're still kind of in the upper ranges of that range over the last several months. Beans on the other side, a technical area, beans have been testing to the downside. On support is 1020. We've failed to take out that 1020 area, especially in a close. So that'll be a key number going forward. Obviously, the driving factor on the beans would be South American weather, and more specifically, at least short-term parts of southern Argentina, which the market will monitor weather forecasts for that region, not only into this weekend, but on into next week. Commitment to traders report out this afternoon. This is as of Tuesday for the last week. Corn funds managed money still short 75,000 contracts of corn. That's down 1,000. Soybeans, they're still long 120,000 contracts of beans, short 93,000 contracts of wheat. They did diminish that wheat short. The big jump, again talking about the livestock, was in the hogs, 16,000 new contracts on managed money, and the hogs bringing it up to 45,000. Keep in mind also, when you're talking about a commitment to trades report, the bean oil, which is still the moving part of the bean complex going forward, is at or near record long. The other interesting thing in the grain markets is the ethanol has had a very nice uptick over the last few weeks. A lot of that's due to higher crude prices. A lot of that is due to short-term supply needs, and thus the ethanol market and or margins are as good as we've seen in quite some time. So thus ethanol plants are running at or near full capacity with that in mind. January 12th is the next update, next crop report, which is about 3.5 weeks away. That will not only be the final production number for 2016, but it will also give us a supply and demand update along with the stocks report. Keep in mind that January crop report can always have some big moves in the market potentially. As we approach the end of the year and on into 2017, the 2 or 3 main factors to watch in this market going forward. Obviously, short term as far as the grains are concerned, and also in some degree the livestock. With the big move they've had this week, it'll be the weather, domestic weather for U.S. Obviously, the cold weather's having some impact and movement both on grains and the livestock, thus helping basis levels in some areas on the grains. And then South American weather, obviously, as we go through the growing season in the southern hemisphere. One trader mentioned, keep in mind we may need a little bigger weather premium in South America than we do in the U.S. in the spring, at least on the soy complex, based on their crop is larger, which is a very good comment. The macros are going to be key as we approach the end of the year. Obviously, since the election, the stock market has been very active to the upside. We've had a huge impact or increase in the dollar. The dollar has reached 14-year highs. In fact, there was a big article in the front of the Wall Street Journal today talking about the dollar and the impact it's having on other economies in the world, one being China, from a standpoint of trying to keep dollars in China, but when you have higher interest rates in other parts of the world, you may see some money leaving in that regard. Also, there was an article this week in regards to world demand for crude. Most are looking for the demand in the world crude this year to be down some. There was some comments talked about China had built up reserves in crude over the last year or so based on cheaper energy prices and also concerns of what may happen in the macro side of the market going forward. It makes you wonder if that same philosophy has been going on in the soybean complex into China over that same time frame. And then as we go into the new year, obviously the rebalancing of funds, the crop report we talked about on January 12th, the new administration coming into Washington, D.C. on the 20th of January. So there's a lot of things after the first of the year that could have some general impacts on these markets. With that, everyone have a great weekend. And again, this has been Clark Neighbors with BIS Commodities at Cedar Rapids, Iowa. Feel free to call us at 800-373-2525 or catch us on the web at biscommodities.com. Have a great weekend.